Good afternoon, traders. My name is Tomasz Wiśniewski, and I'm a chief analyst in Alpari Research and Analysis. And this is daily analytical report, where I will tell you what's going on the markets, and we'll try to look together for decent trading occasions. Luckily, from the fundamental point of view, we do have many interesting events. So let's go straight to the calendar, and I will tell you about everything what has strong influence on the prices of currencies, indexes and commodities. As you can see, we do have a calendar, and overnight we started with CPI from New Zealand, which had an impact on New Zealand dollar. Obviously, CPI came a bit worse than expected, but the main CPI today was this one from UK, but I will tell you about that in a second. After that, the most important thing was minutes from Reserve Bank of Australia, and what did they say is those minutes said that say that growth likely increased in the second quarter, and the stronger labor market removes some of the downside risk to wage growth forecasts, and estimates neutral nominal cash rate of around 3.5. So those minutes were perceived very hawkish, very positive for Australian dollar, and now we can see that Australian dollar is climbing higher, especially against the American dollar, which is obviously much lower than is much lower against other currencies. That's very also crucial information today, that on many instruments American dollar is on the lowest level since few months, or on yearly lows. As you can see, we got a pack of data from Great Britain as well, and the most important one was CPI, which instead of 2.9 came as 2.6, and that caused a huge decline on cable on British pound to American dollar. That pair declined sharply. I will show you that in a second, because it changes the short-term situation from positive, because ahead of this data we were on yearly highs, and after that data was published, we got a double top formation and a false breakout pattern, and we should decline, in my opinion, at least 100 pips lower. Apart from that, what we got was data from Germany and from Eurozone CHF survey, which came worse than expected, and we are still waiting for Mr. Carney, Bank of England governor, for his speech. So definitely cable British pound will be important today, will be influenced by the fundamental factors. So we had the CPI, and now we're waiting for any hints about interest rates and the state of the British economy from Mark Carney. Also important information for oil traders: API, weekly crude oil stocks change, which will be shown actually overnight. From the fundamental point of view, that's not it. That's it from the calendar. But we also have important event from US, more political one, because we got two Republican senators, Mr. Moran and Lee, that are about to vote against the Senate healthcare bill. and by that the bill will not succeed, which is very negative for American dollar, because we can see that those actions from Donald Trump, he does not have a full support of his government, of the Republican government, of GOP, and that questions all his attempts, future attempts, all his proposed reforms, that questions that if he does not have all that support from the Republicans, maybe we won't have all those reforms that he's proposing and he plans to implement in the future. And that is very negative for American dollar. For example, American dollar index after that information dropped to 10 months lows. So well, that shows everything, the sentiment for American dollar. We can see most of the pairs, as I said, against the American dollar are on yearly highs. Euro dollar, Australian dollar to American dollar, obviously also influenced by the minutes from Reserve Bank of Australia. Cable before CPI was on yearly lows. So American dollar now is on a back foot, which is actually negatively influencing European stocks. If we will compare American indexes, and we will compare American S&P 500 to DAX, we can see that this sharp reversal affects negatively European indexes, because many traders now think that that stronger euro against dollar will negatively influence the European exporters. Obviously, the biggest exporters like Germany, France, Spain, not Spain, Italy, and that will be negative for those companies. On the other hand, Donald Trump's administration was telling many times about the fact that the American dollar is too strong. So maybe he has his own headache with Obamacare and not receiving the full support from Republicans, but at the same time he has a small advantage, a small plus on his side, because American dollar is getting weaker. And he was telling us and his administration that American dollar, in his opinion and the opinion of the administration, is too strong. So now dollar index being on the lowest levels for the last 10 months can be good for them. A small plus on their side and a few big minuses. So as you can see from the fundamental point of view, it was busy time. Nice influence on the prices on many instruments that caused the reversal, on many instruments that caused the continuation. But although we had important fundamental events, everything is going technically. So I like it. I like the way how it is done. Because even if we got a sharp reversal on cable, it still creates a technical occasion. Okay, so I will show you cable. So this is our cable where we are seeing long position for a long time. The last chance was this flag. We got a breakout of this flag, of the upper line of the flag, and the price went higher. And actually, as you can see, we broke 130.40 resistance, which was important in the middle and at the end of May, and after that it was legitimate. It was used at the end of June. So after the breakout, naturally, as price action says, it was used as a support. But then, and as you can see, before the data, we are on yearly highs. Then the data came, we broke this horizontal support, and the price created double top formation. And also this can be perceived as a false breakout above the horizontal resistance, right? And as we know from the technical point of from the technical analysis and from the price action that we know that false breakouts usually lead to a movement in the opposite direction. As long as we are above the green line, and to be frank with you, above the second green line, as long as we are above those, the sentiment is positive. So most probably every stronger dip will be used by buyers to buy with better lower prices. Let me extend this support as well. Okay, this causes a chance for take profit action, and most probably this take profit action will happen. But how deep it can be? In my opinion, 100 pips, 110 pips, something like that. Then the next support is 200 pips and 260 pips. So these are potential targets. As long as we stay below orange area, the sentiment in the short term is negative, in the mid-term and in the long term it's positive, definitely. So that is why, in my opinion, every drop will be used by buyers to buy more. And this short-term negative scenario will be here as long as we stay below the orange area. It is not said definitely that we will decline till this level. We may perform a V-shaped retracement and come back here, which will be just fine. That will be just how the trend is, right? So I wouldn't bet a lot of money again for this movement here, but I would bet a lot of money on the fact that if the price will come back here, that will be a buy signal. So watch closely for this orange area, 130, 40, 130, yes, 130, 40 around. It's 15 pips wide area. If the price will come back above, that's a buy signal. American dollar to Swiss franc, that was beautiful. Because we got a nice downswing and the price made 3 trend correction patterns in a row. Flag, flag and a wedge, or this can be considered a wedge because those lines are not parallel, but it doesn't really matter. Those formations are the same in terms of the principle which is involved here. Maybe you remember or not, but here we are talking about possibility of a bullish upswing. Why is that? Because the price met the horizontal support and created a double bottom formation. There was a divergence on the indicators, but in that analysis I told you that there is no buy signal yet. There is just a potential for that, but there is no buy signal, and buy signal would emerge once the price would break this blue line, which was a neckline of this formation and also a resistance line connecting recent lower highs. And the price didn't break this level, and that caused a reversal from the technical point of view. Obviously, we know that it was influenced by the fundamentals, but here the fundamentals and the technical analysis come together. They give the same picture. So they failed to break this blue line, which sparked a reaction here. So we have a nice downswing. Now we just made new yearly lows. We broke those previous lows, and as you can see, we are still on a very important horizontal support. We are still there, but there is no bullish reaction here whatsoever. So I don't think that there is a demand here. The next important horizontal support is here, which is 50 pips lower. In my opinion, with the continuation of this sentiment, we should get there soon. I already showed you like 2 pairs with American dollar, and you can see that American dollar is extremely oversold. Maybe I will show you the next one, which is Australian dollar to American dollar. Here also we are on yearly lows, highs. We are on the highest level since since May 2015. That's pretty remarkable. Let me highlight you the closest possible resistance, which in my opinion can be here. If that is a sharp reversal, we should get Fibonacci's. So 23.6 was broken. Next one 38.2, but to be honest with you, we don't see any. I like when Fibonacci levels are present on the chart, also in the same line as the horizontal supports or resistances. But 38.2, for example, it's from the history, we do not have any important level here. But anyway, maybe that will be influential. Also, a trend line here. Trend line was broken some time ago. That's a good one. Long-term triangle, symmetric triangle formation. Symmetric triangle can go both ways. We got a bullish breakout, so most probably we'll have a continuation of this. So here, especially here, when Australian dollar got the boost from Reserve Bank of Australia, which was hawkish, which was positive about economy, is heading higher. And in my opinion, look at that from the local bottom. It's 600 pips, and on many pairs American dollar is extremely oversold, which creates a huge occasion for a take profit action, for a correction. So I'm a trend follower. Naturally, when I see this kind of setup, I'm in a buy mode, but for me there is no buy signal here, because I don't like buying on tops. Right, I'm a trend follower, but in my strategy, I'm waiting for corrections, and when those corrections happen, I go with the trend. Here we didn't have correction for the last 370 pips. For the last 370 pips, we are just going forward, right? And this is not the best place to be for me, even if I'm a trend follower, and that's what I'm trying to teach you and show you, that you can be a trend follower, but you can trade corrections. So wait for the correction to happen and try to anticipate where the correction will end, and then enter the market. Okay, so well, we use that time also to analyze Australian dollar to American dollar. So here you can see symmetric triangle. We broke the upper line of the symmetric triangle. You can see the horizontal resistance, which was present on the chart since August 2016, so very important. It also got broken, and now the price broke 23.6, where actually the local correction happened, as you can see, and now we are heading higher. No fear, just pure imagination. The first target is here. I don't know if we will have a correction first or we will get there first. I'm not trying to analyze this instrument, because for me it lost I lost the technical sense on this instrument. Australian dollar to American dollar is highly correlated with gold. Gold is highly correlated with Aussie. Gold is obviously in a much worse shape than Australian dollar to American dollar. They are on yearly tops, and gold is struggling. Gold is bouncing from local lows. Gold is bouncing from the 4 months lows. But as you can see, the last few days are very positive. It's mostly due to the weaker dollar. But this positive scenario may be coming to an end. Why is that? Because we are below a very important resistance. Well, we are under influence of the inverse head and shoulder formation, left shoulder, head and right shoulder. On Friday, in the same time, we broke the neckline, this black line, which triggers the buy signal, and we broke also the dynamic resistance, dynamic downtrend line here, and also we broke 23.6 Fibonacci. That gave a momentum, and we are heading higher. Since Friday, we added $10 more, but we are below 38.2 Fibonacci, and below the support, which was very important at the end of June. That can potentially be a strong resistance, and we have some chances for a reversal here, but as a price action trader, I'm waiting for the price action there. I'm not taking that resistance for granted because it's just there. Okay, it's not how it works. You should wait for the reaction there. If you will see a demand, there is no trade here. If you will see a supply winning, defending this resistance, that will be a good occasion for a short position. A bit exotic instrument for some of you, American dollar to Mexican peso. It was very important and popular before the elections in US because it was influenced by every poll, Donald Trump, but for Mexican peso, Hillary Clinton, good for Mexican peso. But as you can see, Mexican peso after Donald Trump got elected was battered, and after some time, after a few months, after half a year, Mexican peso is stronger than before Donald Trump was elected as a president, so maybe he's not that bad. If we would just consider those charts, obviously. Euro to American dollar, here you can see why European traders can be concerned about euro, because since from the bottom to now 1200 pips, we went from 10.3 to 115 on a weekly chart. As you can see, we bounced from very significant lows. We are very close to beating the tops from 2015. Here is the place where lowering of interest rates in Eurozone started. As you can see, that was a nice movement, and maybe now we'll have a reversal. I marked you. It's hard now to get some resistances here on such high levels, but I marked you one. I marked you second one. On a weekly chart, we can try to look for another one here, slightly higher here, but it's just a lottery if they will be influential, because as you can see, when the price was crashing them from the top, they didn't work as an important support. So why they should be now important resistances? Euro to British pound, this is also interesting one, because first we got a false breakout of the horizontal resistance here, and then we got a false breakout of the support, which is a long-term uptrend line. Well, long-term, mid-term uptrend line. For me, it's mid-term if it's from May. First false breakout caused the proper downswing for 200 pips. Second one can also cause an upswing. If we will be able to close this H4 above this horizontal support, which should be still respected, if we will be able to close above 0.8865, that will trigger a buy signal here. Also, let me show you silver, because silver got this flash crash 2 weeks ago, and now we're just under the well, silver is following gold, obviously, but this flash crash can be considered as a false breakout, and also this retracement can be a V-shape retracement, which is positive for the buyers. Also, we defended, it's a false breakout because we tried to break $15.80 per ounce, but we didn't manage. So it can be considered a false breakout, but there is no buy signal yet. The buy signal will come back to the chart once we'll be here on 17.10, let's say. So we'll come back after the uptrend line, and we will break the downtrend line here and a horizontal resistance here. So that will be the place to start a bullish trend. For now, that can be just a dream. Only the fact that we defended this flash crash does not create a mega positive scenario here. Okay, I will show you also those indexes and oil. Here we do, I can see that the price is getting ready for an inverse head and shoulder pattern. Left shoulder head, right shoulder. I wrote an analysis yesterday and I was telling about that there is a possibility. Also, I told you that this kind of setup, so a bounce from 50% Fibonacci with a double bottom, that's a nice price action pattern, and it actually worked for some time. But now this pressure on oil from the weaker dollar is getting stronger, and they can break this level. And the first potential target for this is this long-term downtrend line, which connects the lows from April and from May, and that will be first potential target for the rising price of oil. Because currently with that scenario that I was telling yesterday happened here. The movement was very small though. You just have to respect price action, right? We had a one bounce. Who could trade that? Traded that. If you didn't, I don't think that there's now a good option to go short. I don't think that. You can see DAX traders concerned about too strong euro, which is negatively affecting mostly German companies. Let's be honest, euro is all about Germany. Other countries like Italy or Spain or Greece or France does not count. Maybe France or maybe they think that they count, but I think it's all about Germany. So too strong euro affects German companies. That is why. Well, it's a German index. It's not Euro stocks, right? It's a German index. But DAX anyway is the most important European index. So it also reflects the mood in the whole Eurozone, not only in Germany. But you can see that traders are thinking that too strong euro will affect those, and breaking the support does not change anything. Breaking this support will change something, because it can bring us sell signal here. And S&P 500, you can see that the mood here is very different, right? We are close to the local tops, actually below on the area of local tops. We are having a rectangle, very flat rectangle, which is rectangles the price continuation pattern, a trend continuation pattern. So we should see new all-time highs on S&P 500, and it shouldn't be a surprise for anybody. So we can see that the mood is completely different. When the dollar is weaker, American companies are happier because they start to buy goods sell goods overseas, and the appetite for those goods is bigger. Actually, with the American dollar to Polish zloty going to new lows, I started to think about buying car from United States. So it's how it works all over the place, all over the world. When American dollar is getting destroyed, many people start to think about buying something from America, which is obviously great for American companies because they can sell goods overseas. That's how it works, guys. Thanks very much for watching Daily Analytical Report. We do have a few currency pairs left, but we will talk about that definitely tomorrow. I think it's that for today we have more than enough interesting trading setups. I think if you're looking for some nice trading occasions, you should be happy with those which we were showing today. Now half an hour break, and after that a webinar about basics of Forex market. I hope that I will see you all there. Thanks very much.